David, thanks very much indeed for joining us. Marginal disappointment in Wayfair numbers, it appears. What do you think is irritating investors here?
Hey, Andrew, thanks for having me back on. So what we're looking at here is there was a slight miss on the EBITDA line, and the big piece of that was Wayfair stepping up their ad spend dollars. So you did actually see a pretty good outperformance on the top line. Wayfair's U.S. business revenue growth was up just over 1%, and that beat expectations. That was the best number in almost a year. And just to put that into perspective here, we're talking about a category where the numbers have been pretty terrible, to be honest with you. You're talking about home furniture, furnishings down high single digits, low double digits. So for Wayfair to outperform on the top line, we actually found that pretty encouraging. But this stepped up advertising is what's pulling the stock down a little bit today.
They are putting a toe into opening brick and mortar stores. I think they're planning their second outlet.
Yeah, that's right. And we visited this Chicago store that they built over the last year. Very impressive unit. It's about 150,000 square feet. They haven't given great details on just what the unit economics are, but we've looked at this. We think this could be $1-2 billion sales opportunity over time. And one important piece that they outlined today was that in these markets where you do drop a store, you are seeing this halo effect to the online business. Wayfair pointed out that in the state of Illinois, their sales growth was 15 percentage points higher than the total company. So you are seeing this sort of retail footprint act as sort of a billboard for the online business. And they're very, very early in this process. But to us, they could easily operate 25, 50 of these bigger type showrooms over time.
I'm just looking at a 5-year chart here. The stock shot up in 2021. It got north of $350. Wow, it's come right down to $45. Why was there such a fall from grace?
Yeah, great question here. So this was one of the pandemic winners, right? So if you look back to those early quarters, Q2 of 20, Q3 of 20, Wayfair sales growth simply exploded, right? These guys were the only game in town. A lot of the physical stores were shut down. So you saw a huge shift to the e-commerce channel, and Wayfair in turn stepped up their profitability very, very massively. You had a few quarters of positive EPS. You had adjusted EBITDA margins north of 10%. That's basically a guidepost of where they can get to once they get back to this bigger scale. But the story of the last few years has been, can you hold on to these share gains? Can you hold on to these active customers that you brought in? We think they've done a pretty good job to maintain that base. That sales base stepped up massively. So we think they've done a good job controlling what they can control. But just think about that relative outperformance versus the market. I think that's why we're taking this more positive view. I know the market has sold off the stock a bit here, but a lot of what Wayfair can control, they've controlled incredibly well, taken a lot of fat out of the business. And this is one of the stocks in our coverage that has a significant amount of upside once revenue growth does come back.
And just to go back to the advertising expenses got to nearly 14% of net revenue. So they presumably see a return on that.
That's right. And you don't see it right away. So if you drop a lot of ad spend dollars in Q4, that doesn't necessarily mean Q4 revenues are going to tick up. Yeah. This is more of a 90, 120, 180 day type build up. So you should see the benefits of this stepped up ad growth come into play early into 2025. I think that's what the market's starting to expect. And you're starting to see some of these buy side estimates get a little bigger as you go through the balance of the year. But that's what investors are really playing for here, is if the top line demand does come back, the housing market gets a bit better, there's no reason Wayfair can't get back to a mid-single digit type revenue growth number, and then maybe even higher than that in the outer years. So that's where the real juice is in the model. And we think it's coming. It's just been sort of this, not a wait and see approach, but just sort of this slow to materialize recovery.
And just finally, delivering furniture, et cetera, hundreds of kilometers or whatever, they need a pretty big logistics network. And so they have this thing called Castlegate. So do they just don't use regular couriers to move stuff, or how does that work?
Yeah, great question. This is a super interesting and differentiated piece of Wayfair that we think is very much a competitive dynamic that sets them apart. So a lot of the product is manufactured overseas, right? A lot of this product, the majority of it does come out of Asia. So you have these shipping times that are very elongated, 6 to 8 weeks, 12 weeks on certain things. So what Wayfair's Castlegate network does is they forward position that inventory into the US. So when you're shopping on the app or the site, you can see, hey, this is guaranteed 1-day delivery, 2-day delivery. And the conversion uptick that they see on these Castlegate products is multiples of non-Castlegate products. So that's what's really moved the needle. They shared some more data on that today. We thought that was encouraging as well. But it's also a nice way to potentially get around like some of these tariff issues, because Wayfair does act sort of as a platform. They have a take rate on product. They don't have inventory risk. We think that's something that the market doesn't totally get, just because a lot of product does come out of Asia. But Castlegate's definitely a helper in that process.